grain market had quite an overnight trade, pushed quite a bit higher, anywhere from 3 to 4 cents higher for corn, as much as 10 cents higher for soybeans, and as much as 5 to 7 cents higher in the wheat market. That's not the case here during the day trade. Let's look at the corn market right now. That front month of December is our new crop. It is steady and unchanged, and now the March is down a half. May is down 3/4. The July is down 1 at 4.12. So weakness comes to the corn market for the first time here today. Soybeans are weaker, but they're not on negative territory just yet. November up 2 3/4, 9.36. The May is up 3 1/2 at 9.71. Let's look at wheat for Chicago. Mixed. That's what we're going to mix to flat. December unchanged, 5.23 1/2. July unchanged at 5.37 3/4. December Kansas City wheat, though, still a penny higher at 4.26 1/2. The July is up 1 1/2 at 4.57 1/2. That is a market that has a lot of catch-up work to do if it's ever going to trade at a premium again to the Chicago wheat market. Joining us now, Brian Hoops with Midwest Market Solutions here with us. He is based in Springfield, Missouri. He joins us now. And Mr. Hoops, what do you think of this corn market here? We're weakening today. It didn't take long for that China news to wear off, did it?
Yeah, you're exactly right, John. Good morning. We're seeing a little strength in soybeans and soybean oil, but most of that strength in the other commodities, the grain commodities, are starting to weaken in here, starting to turn a little negative on the day in the corn market. You know, the news out of China was pretty vague as far as when they're going to make any purchases. And in fact, if they follow through with these purchases, this gets them back to where they were last year as far as buying. They have on the books right now about 5.6 million tons of U.S. soybeans, and they haven't shipped hardly any of those. So if they would buy 10, that puts them back to about 15.6 million tons, just a little bit more than what they bought last year. But, you know, there's really nothing saying when they're going to buy these soybeans. They may just kind of buy what they need now or book at least what they need and see how the South American crop develops. So I think the trade's starting to become a little concerned that we don't have a deal made and we don't have any real specifics on when this is going to take place. So a lot of concerns starting to creep in from a lot of the trade participants that a lot of producers are hoping that we get an announcement made and we see this big rally. And we're getting more and more concerned that this may not happen.
Well, Brian, what about the concern before all of this euphoria about this most recent, this recent quote unquote promise here? We already have done a lot of demand destruction as far as the African swine fever. And isn't China probably more of a trading partner now with Brazil for their soybeans than they are the United States? And that's the way it's going to be for who knows how long?
It's certainly possible. Yeah, you know, the demand destruction you talked about is real and evident. That's why they only bought, that 13.5 million tons of beans last year. They did not need as many soybeans as they normally do, and they were able to use Brazil, Argentina as a way to compensate for the lack of any U.S. purchases. And you know, we look at this January soybean contract. Since we bottomed, we've rallied almost $1 off of our lows in early September. So we've put in a pretty nice post-harvest rally and kind of anticipating, you know, some of this Chinese demand, anticipating some of this, lower yield numbers. And really that's going to be the key as far as getting us higher prices in both corn and soybeans is if we have production come in below what the USDA is currently forecasting, because it just doesn't look like demand is going to be strong enough over this next marketing year.
Brian, right after the break, we'll come back and visit with you about the livestock trade. That's been kind of a mixed market affair today, too, with hogs headed lower. We'll talk about that next here on the Market Report. Futures. Let's find out where those futures are at here as we get started here on the livestock segment. The live cattle market earlier was just a little bit on the flat side. Right now, we're showing where this live cattle market is now on the negative side, except for April. The October down 67, the December down 13, the February down 13. Feeder cattle market, though, this is almost inverse of where we were at yesterday. Feeder cattle market higher, with the November up 15, the January up 10 at 139.20, and the March up 17. In the hog complex, it's the December down 158 at 66.25, February down 92, and Brian, we'll turn our attention back to Brian Hoops. Brian, I'm not going to put you on the spot and ask you about this hog complex, but and there is weakness here. You think this is more of a disappointment after talking about what we were, you and I were talking about in the soybeans, with this uncertainty of what China's thinking about here about loosening up some of these tariffs?
Yeah, I think that's really the main fundamental driver today, John. I think that's what gives us market direction rather than technicals, and it's that disappointment that's weighing on those front month hogs. Dees in February down triple digits, and I hate to look at technicals for direction, but it was just a week ago that these hogs closed above their downtrend line, but never had a follow through. And now with this morning's action, they've taken out last week's lows. So it does seem like some of the trade is liquidating some long positions or trying to get short if we see any strength in the markets like we did this morning with that higher opening and giving way over that disappointment about China.
Okay, Brian. Well, thank you very much. Great to visit with you. I hope that you have a good afternoon. Brian Hoops with Midwest Market Solutions in Springfield, Missouri. Let's take a look at the heating oil market, because it was down just a little over 1.50 pennies just a few moments ago, and now the November is up almost 2 pennies now at $1.96, Janet. So a little bit of two-sided action. A lot of these markets today.
Very much so. Keeping you on your toes. Thanks, John.